some breathing room, and then boom, the price hits our full take profit. Today I will reveal my exact trend line break strategy that I use in the financial market. This strategy is really simple and yet it is very powerful. There are many day trading strategies to choose from and they all have different purposes. I would always recommend to try out different ones and see which one works best. Now, I personally use this strategy a lot. I use it with other tools, other strategies, other indicators. Here you can see my 2 recent trades that I took in the financial markets using this particular strategy. I also shared them in my VIP community where members can copy my trades and make money as I do in the market. So without further ado, let's get right into it. So the first thing that we need to talk about when using trendline break strategy is what is a valid trendline and how to mark trendline in general. So if you have been trading already, there's a good chance that you already know how to mark a trendline. But for those traders who are new to the markets, first of all, to mark a trend line, you need to identify the general trend of the market. So the market can move either upwards or downwards or sideways, so one of 3 ways. And if you see that the general direction is upwards, the market is moving slowly upwards, that means that you will be interested in marking a bullish trend line. Now, a bullish trend line is simply connecting the lows of the price. So for example, we have our low here, then we have our second low, our third low, our potential fourth low, and so on. So let's mark a trend line just connecting these dots over here. And as you can see, we have a great valid trend line. And now, how to know if the trend line is valid? Well, a valid trend line has to have at least 3 touches. So now let's count it. We have 1 touch over here, we have a second touch, and we have a third touch. Because if you draw a trend line and you only have 2 touches, that doesn't prove that your trend line is valid, because it may be just a random fluctuation. But if you have a third touch, that means that now the chances are really strong that this trend line is working. And before we move on further, it is really important for you to know that touches to the trend line doesn't have to be perfect. So that means, for example, over here, as you can see, it's almost perfect. But for example, here we have a wick coming basically not exactly to the trend line, and that's perfectly okay. And for example, here we have a wick that is high above the trend line, but again, that is considered as a touch to the trend line, and that's okay. The price doesn't have to touch a trend line precisely. As you can see over here, it's not really precise, but it still counts as a valid touch. Now there are 2 ways to enter into a trend line break situation. So the first one is, imagine we have a downward structure, so a bearish trend, and we mark our trend line like this. So we have our first touch, second touch, third touch, and now we know that it is a valid trend line. Then what I personally like to do is wait for a trend line to break right here, but more importantly, mark a zone right here next to the last touch of the price, so that when the price breaks this particular point right here, this level, we know that the market is now reversing and it's moving against the previous trend, and that is how we know that we can enter into the markets. Basically, we're waiting for the price to break this trend line and then to break this level. And this is where we would entry into the markets and capitalize on the reversing trend. And then we also have a second way to enter into the markets. So basically, again, everything is the same. We have to have a trend line. We have to mark this level right here, basically on the point where we had our last touch to the trend line. But basically this time, again, we are waiting for the price to break this level, but we are also not entering instantly, but we are waiting for the price to retest this zone right here. So basically either this level or the trend line, and then we are waiting to open a position after retracement. Both of these entries are okay. When you are entering instantly after the break of this level, you are basically pursuing higher rewards because you will be entering early and then potentially grabbing a lot of profits, but you are running a risk. If the price retraces, it will stop you out. But in this case, this particular way is much safer, but it also has its negatives. Because it is safe, you can potentially miss the whole move because the price isn't guaranteed to retrace, so it may just shoot upwards. So it's really up to you how do you approach this strategy. And the last really important thing to know if you want to apply this strategy is where to put your take profits and stop losses. So the way I approach this strategy is basically here we have a touch to the trend line, and that means that we mark a trend line, but this trend line is only indicating a line, so we can make it like this. Then we also mark another trend line to another touch over there. So basically, theoretically, we have a touch over here, but the distance is really small. So what I usually do is mark a line over here, then a line here, and a line over here. And these are our potential profit targets. So when you have your profit targets, it becomes pretty simple. So when we have a break over here, from experience, I can tell you that it is really likely that the price will hit your first take profit, really likely, and then eventually as you move upwards, the chances decreases because it's just logical. Not always the price will go to your full take profit because it's a lot of pips to go. Sometimes the price will hit your first take profit, sometimes it will hit your second take profit and then move downwards, or sometimes it will move all the way and basically hit your all take profit. Now let's see how this strategy works in action. So the first thing that you do is mark a trend line, then count the touches. So we have one touch, we have second touch, we have the third touch over here. Then anticipate the trend line to break. So over here what you need to do is, as we talked before, to mark a level so you know when this trend line is broken and when the price will also break the previous trend. Now let's see how everything will go, and then boom, we have our trend line break and the price also broke this level. Now remember, you have two options. The first option is to enter right here, and the second option is to wait and anticipate a retracement to this zone right here and then open a position. This is exactly what I will do in this situation. I will open a position right here and basically put our stop loss at somewhere at 30 pips, and now let's see where we can put our take profit. So this is where our potential profits targets could be, because here we have our touches to the trend line. So the first take profit would be right here, and then the second take profit would be over here. But in this case, we are leaving the price some breathing room, so we have to have at least 1 to 2 risk reward ratio. So I would put my target somewhere over here. Now let's play the price and see how it will go. So the price is developing. As you can see, it retraces right here. So good thing that we left some breathing room, and then boom, the price hits our full take profit with this trend line break strategy.